Let me ask you something. When was the last time you checked how much interest your bank is actually paying you? Not your credit card, not your mortgage, your savings account. Because if it says 0.01%, you might be losing more money than you think. And the craziest part? It's completely legal. Stay with me. This might change how you see your bank forever. Right now in the United States, many major traditional banks still pay around 0.01% to 0.05% APY on standard savings accounts. That means if you have $10,000 sitting there, you might earn about $1 a year. $1. But here's where it gets interesting. In recent years, Federal Reserve interest rates have been above 4%. Even above 5%. So here's the obvious question. If interest rates are high, why are you earning almost nothing? Here's why. Banks don't just store your money, they use it. When you deposit money into a bank, you are essentially lending it to them. And they lend it out again. Credit cards at 20% interest, auto loans, mortgages, business loans. They earn the difference. That difference is called the spread. And that spread is how banks generate billions in profit. Now pause for a second. If they can earn 5% or more using your money, why are they giving you 0.01%? Because they don't have to give you more. And most people never move their money. Let me show you something simple. If you keep $20,000 in a 0.01% savings account, you earn about $2 per year. $2. But if that same $20,000 is in a high-yield savings account paying 5%, that's $1,000 per year. Without investing, without market risk. And here's the important part. High-yield savings accounts from legitimate banks are still FDIC insured up to $250,000. Same federal protection, same legal framework, different interest rate. So why doesn't everyone switch? Convenience, habit, trust, and something even more powerful, inertia. People fear moving money more than they fear losing money slowly, and banks know that. Now let's be clear, this is not illegal. Banks are businesses. They decide what rate they pay depositors, and they advertise those rates publicly. But here's what most people don't do. They don't compare. While many large traditional banks kept savings rates near zero, online banks began offering 4%, 4.5%, even 5% or more. Same FDIC insurance, same safety limits, different return. So the real question isn't, is my bank stealing from me? The real question is, am I paying attention? Because when inflation runs at 3% or 4% and your savings earns 0.01%, your purchasing power quietly declines. No alert, no warning, no dramatic headline, just slow erosion. And that's what makes it dangerous. It feels normal, but normal can be expensive. Over 5 years, that difference between 0.01% and 5% can add up to thousands of dollars. Not because of fraud, not because of a scam, but because of inaction. So what can you actually do? First, open your banking app. Check your current APY. It takes 10 seconds. Second, compare it to high-yield savings accounts. Make sure the bank is FDIC insured. That matters. Third, if your money is earning almost nothing, consider moving it. You don't need risky investments. You don't need crypto. Sometimes the smartest financial move is simply refusing to accept 0.01%. Because here's the truth. Your bank isn't holding a gun. It isn't breaking the law. But if you never question what they're paying you, you are choosing lower growth. And over time, that choice compounds. quietly. Now you know, and awareness is powerful. If this opened your eyes even a little, make sure you subscribe. Because on this channel, we break down money, banks, investing, and financial systems in a way most people never explain. No hype, no fake gurus, just clear financial insight. And before you go, drop a comment and tell me what your bank is paying you right now. You might be surprised. I'll see you in the next one.